There's a moment, usually around a major financial event, that people realize their situation has changed in ways they're not fully prepared for. The numbers are bigger, the decisions are more complex, and the cost of getting something wrong is higher than ever. Most people at that point look for help with the immediate issue. At Darrow Wealth Management, what we offer is something more valuable, a long-term partner who doesn't just answer today's questions, but helps you make better financial decisions for the rest of your life. We specialize in helping individuals experiencing sudden wealth and liquidity events. Perhaps you're selling a business you spent years building, receiving a significant inheritance, or are finally getting liquidity from stock options you've held for a long time. These are exciting milestones, but they come with an enormous amount of financial complexity and a surprisingly short window to get things right. And mistakes happen more than you'd think, because the reality is most people have never been through a multi-million-dollar financial event before. And the complexity is genuinely difficult to navigate without the right advice. People don't realize the decisions they make or fail to make before, during, and after a liquidity event are often irreversible. There's rarely a second chance to go back and optimize something you missed. If you've received an inheritance, there can be significant tax-saving opportunities that have specific deadlines. Things like optimizing required minimum distributions from an inherited IRA, or securing a step up in cost basis on inherited assets, which can dramatically reduce capital gains taxes. If you're a business owner preparing for sale, the terms of the deal matter as much as the offer. We see exiting business owners leaving millions on the table because they didn't have someone in their corner who understood that it's all about maximizing cash at closing and that even taxes are a negotiation. And if you're a business owner, founder, early employee, or someone who's received equity in a startup, your shares may qualify for something called Qualified Small Business Stock, or QSBS, which allows you to exclude a $10 to $15 million gain from federal taxes entirely. But this has to be identified, documented, and planned for in advance. Unfortunately, this is a niche practice area, something most generalist financial advisors aren't equipped to guide you through. We know because we've flagged shares for new clients that their previous accountant and financial advisors missed. Beyond the event-specific mistakes, there are common behavioral pitfalls we see, regardless of where the wealth is coming from. Pre-spending is a big one. Mentally or literally spending money from a deal or windfall before it's actually in your account, which can create serious issues if anything doesn't go exactly to plan. On the other end, we see people making reactive decisions too quickly, gifting large sums of money to family without a plan, making a large purchase without a strategy, or making financial moves that may seem intuitive but aren't actually optimal, like using a windfall to pay off a low-interest mortgage where that money could be working a lot harder elsewhere. A sudden wealth event is, for most people, a once-in-a-lifetime experience, and the stakes are too high to figure it out as you go. At Darrow Wealth Management, we specialize in helping you navigate exactly these types of high-stakes moments with a clear head, personalized strategy, and the experience of having done this many times before. What makes our approach different is that we don't look at the liquidity event in isolation. We look at the whole picture, where this fits within the broader context of your financial life, your tax situation, estate plan, and your goals for the future. A liquidity event isn't just a transaction. It's often a turning point. It's how you position yourself in the months surrounding it that can really have a lasting impact for decades. In practice, this means we spend a lot of time coordinating across your full advisory team. Your tax advisor, your estate planning attorney, your business attorney if you're going through a sale. And if you don't have that professional team in place yet, that's completely okay. Honestly, it's very common. The majority of our new clients have never worked with a financial advisor before their sudden wealth event. This is the first time they've had this level of assets to manage and needed this type of support. So we help with everything, making introductions to qualified CPAs or attorneys when needed, reviewing your full financial picture from the ground up, and helping you build the foundation for managing new wealth, not just right now, but for the long term. As a fee-only advisor and fiduciary, our model is straightforward. We are paid by our clients only as a percentage of the assets we manage on their behalf. We don't earn commissions. We don't sell financial products. Our incentive is simply to help you grow and protect your wealth. That's it. Many firms grow by taking on as many clients as possible. At Darrow, we've chosen a different model. We work with a select number of clients by design because we believe fewer, deeper relationships produces better outcomes. And so we have a $2 million investment minimum. Everything I've described here and a number of services we didn't even get into are all part of our ongoing wealth management program. We build a comprehensive, integrated strategy for each client, and we stay actively involved as your financial life evolves. So if you're approaching a multi-million-dollar liquidity event, or you're in the middle of one right now and are not sure if you have the right strategy in place, I love to talk. The earlier we can connect, the more we can do for you. You can schedule a consultation directly on our website. There's no obligation. It's just an honest conversation about where you are today and what it would look like to work together.